Global investment banks, mutual funds, hedge funds, and other institutional investors are large participants in equity trading as well as in foreign exchange trading. Due to the nature of their work, they're exposed to a very significant risk on account of credit risk, market risk, and operational risk. Credit risk is the risk of counterparty default in a market trade. Market risk is the risk of price volatility impacting the trading positions of the investment bank. And operational risk arises because of faulty procedures, human errors, etc. So, who in an investment bank or which department in an investment bank takes care to prevent these risks, to create a very strong procedural front as well as a strong IT infrastructure so that exposure to credit risk, market risk, and operational risk is minimized and losses that accrue on account of them are significantly reduced. Yes, my friends, this is the function of the middle office, shortened as the mid office in an investment bank. Hello, everybody, and welcome to the second video on the trade life cycle of equities, where we'll be exploring the role of the middle office and what are the steps of middle office functions in a trade. So, therefore, I've already uploaded a video on the trade life cycle of the front office functions of trade capture and trade execution and trade capture. We'll now talk about the middle office functions, which largely looks at risk management, controls, and compliance. If you're interested in a career in global markets with a specific focus on equities, foreign exchange, or even interest rates, then do take a look at the videos that I've uploaded on different aspects of operations, regulations, settlements, on fund accounting, OTC derivatives, trade life cycle, and custody operations, because together we shall learn all the new events that are taking place in the processing and settlement of these trades that take place on different stock exchanges like New York Stock Exchange, London Stock Exchange, Tokyo Stock Exchange, etc. The trade life cycle comprises of three distinct steps. That is the front office functions, the middle office functions, and the back office functions. The front office is the client facing or the interbank facing activities of doing a trade. I've already uploaded a video in which we discuss about the different types of trade execution and trade capture. The middle office is like a controller. It's like a leash. You know, when we walk a dog in the park, we keep a leash on the dog so that it doesn't run away, right? It stays in our control. Therefore, the middle office is like a leash that is kept on both front office and back office so that market frenzy, because there's a lot of emotional involvement in trading, okay? And market frenzy can result into a clouded bias towards trading. All this cannot happen in an investment bank. It cannot happen in a large institutional office because it would result into significant losses for the front office otherwise. Mid office is that controller. Back office is the functions that involve processing, settlements, accounting, and reconciliation. And the organization that is following these three steps is called as an STO or a securities trading organization in the environment that investment banks operate. The mid office is a risk management function. Risk exists in every function of an investment bank simply because of the nature of the work that they do. Mid-office responsibility is not to eliminate risk but to manage the risk so that the bank minimizes the losses on account of risk exposures. Mid-office also tries to utilize the latest software that is available for order management systems, for trading, for creating an STP environment, etc., for which they need the latest IT support, IT standing for Information Technology Support. Mid-office is also involved in regulatory compliance because financial services and banking is the largest regulated industry in the world, very, very heavily regulated by multiple entities, capital market regulators, money laundering regulators, finance ministries, etc. Regulatory compliance in an STO is very, very high. And failure to comply with those regulations could result into several penalties, sometimes even suspension of trading on a few days. So therefore, the mid-office function is extremely critical to ensure that trading is done by the front office in a controlled, regulated manner without taking undue risk on account of credit risk and market risk. These three functions are normally the role of the mid-office employees. Let's look at the steps involved in the middle office role of a trade life cycle. Okay, so this is slightly different because when you're looking at a trade life cycle, we're talking about the steps that are involved in trade life cycle. So the front office, there were two steps, that's trade execution and trade capture. The mid office has got the following steps. The first one is trade booking. Okay, trade booking is done simultaneously by front office, mid office, and back office, something that we'll be exploring in the next slide. Then comes trade enrichment. Trade enrichment refers to adding to the data that is already stored in the trade details and therefore enriching the data that is provided by the trade details given in the trade booked by the front office. You're making now it more easy, more convenient to help the back office complete the settlement process. The third one is trade validation. This is the final step, which is an internal function within the STO, which ensures that nothing is wrong with the trade details. So trade validation is a mandatory step before the trade details are shared with the counterparty. In some organizations, a couple of these steps could be done by front office, maybe trade validation is done by back office. Generally speaking, because of the large amount of work that middle office does, it could be a repetitive work as well as in an investment bank, and that could result into some bit of lapping over the activities of the bank. But otherwise, these are the three broad steps for trade life cycle. In some investment banks, middle office is also involved in trade confirmations, whereas in some other investment banks, it could be a function of the back office. So now let's take a look at each of these four steps that is largely covered by many of the books on trade life cycle as well as employed by many of the STOs. The first one is trade booking. Trade booking refers to the trades that are executed. Okay, so orders are fed into the trading system. The executed trades are now captured by the STO. At this point of time, counterparty obligations start getting generated. If the STO is a buyer, its counterparty obligation is to pay. If the STO is a seller of equities, its counterparty obligation is to deliver the securities. So executed trades are captured simultaneously and booked by front office, middle office, as well as back office, so that there is no difference in the details that are captured by these three distinct entities. This is called as trade booking. The second step is trade enrichment. Trade enrichment refers to adding more details to the trade that is captured on the trading slip. The trading slip captures primarily details like what is bought or sold, at what price it is bought or sold, how much is bought or sold, etc. But this data isn't enough to conclude the trade. It is not enough to settle the trade. So what has to be added? The data has to be enriched with further additional details so that the trade can now be processed. Of which the first one is trade figuration. Trade figuration means calculation of the cash values of the trade. Cash values of the trade would result into understanding what is the market risk that the bank is exposed to, so that we now understand the price multiplied by the volume of trade gives us the cash value of the trade. Add all the taxes that are involved, add the brokerage, you understand what is the exposure of the STO. And this trade figuration is normally done in an automated fashion in a STP environment. STP standing for straight through processing. Custodian details have to be filled into the trade. Who is the custodian of the STO? Who is the custodian of the counterparty? These details have to be extracted and added to the trade details. that have been booked by the front office. Settlement instructions. What is the nature of settlement instructions? Because settlement instructions are standard settlement instructions, that's SSI, almost all aspects of the trade are routed through this manner. And the last one is trade reporting. Whenever you see the word reporting, remember it refers to reporting the trade to the regulators. Okay? So the meaning of the term reporting means you're now informing the regulator that these are the transactions that have been done by the STO. Trade validation. This is the last step before the trade is sent to the external environment. So this is a final internal check on whether all details with respect to the trade have been captured. If trade validation isn't conducted, the bank is exposing itself to unnecessary conflict of trade details with counterparties. Therefore, trade validation is conducted to reduce the operational risk, to ensure that the STO is in control, and there is timely and accurate client servicing. If there is no trade validation done, there could be a dispute of the trade details at the time of confirmation, and it would be very embarrassing if the STO could not meet the settlement deadline because of an error on account of trade validation. So this is a final check that needs to be done. If it's not done, then the bank exposes itself to a very high degree of operational risk. Clients get angry because they don't have updated postings, positional updates. They don't know what is the exposure that is there. They get very irritated. They get very annoyed because these are large institutional clients who are trading in billions of dollars, and they need to have timely client servicing. In some STOs, trade confirmation is done by the middle office, and some others it's done by the back office. Let's take a look at trade confirmation. Once the trade is validated, the trade is confirmed by the STO to the counterparty. Counterparty is the party against whom we have traded. Therefore, counterparty obligations arise. Confirmation is sent, confirmation is received. If confirmation is sent but not received, the STO must inform front office to put pressure so that the confirmation is received. And counterparties involved are very large institutional investors, and therefore trade confirmations are absolutely mandatory. In an STO, post the trade, there is a very high degree of regulatory compliance. This arises because of reporting to regulators, like in the United States. Investment banks have to report to SEC. If it's a foreign institutional investor, they have to report to OFAC. They have to keep the Fed informed if there's a foreign exchange inflow, etc. So reporting to regulators is a standardized format reporting that takes place because regulators read the data and try to take insights into what is the nature of the trades that have taken place. There's also an internal reporting that is done to the ALCO committee, that's the Asset Liability Committee, to the Credit Risk, Market Risk, Operational Risk Division, so that we understand what is the exposure of the institutional investor towards different risks that the bank is exposed to. The main objective of regulatory compliance is to reduce market risk and credit risk. So the middle office comprises all functions that have got to do with risk management and compliance to ensure that the bank has put in place a strong set of processes and procedures that do not allow traders or back office settlement people to make mistakes or to skip checks, etc. So the middle office is in charge for not just risk management, which is a more proactive function, and also responsible for compliance, which is more reporting in nature, and therefore talks about a very high degree of minimizing the risks on account of market risk and credit risk. If you have any queries, please post in the comments box. My next video will be on the settlement processes. We'll start with the main function of SSIs, that is the standard settlement instructions, which flow from the STO to the custodian. Your feedback is very important to me and my team because we've been working on these. We spent close to 10-12 hours on every video just to create the content and see that it is transparent, it is authentic, it is real. We have academic counselors who go through the content to vet the data and ensure that we are updated with respect to the latest processes, procedures, etc. Thank you very much for watching this video, and stay tuned in for the next video number 3 on standard settlement instructions from custodians. Thank you.